Welcome to Taxed and Confused, the podcast where tax administration meets real talk. We are your hosts, Lizzie and Lisa, two tax nerds on a mission to decode the rules, demystify the system, and maybe even make you laugh along the way. From tax returns to objections and everything in between, we're diving into the world where the burden of proof is on you, not the ATO. That's right, this isn't criminal law. In tax, you're guilty until proven compliant. But just a quick heads up, this podcast is for educational purposes only. It's not tax advice, and it's definitely not a substitute for professional guidance tailored to your situation. So brace for bureaucracy and join us as we explore the weird, the wonky, and the wildly important world of tax admin. Because when it comes to tax, we're all a little taxed and confused. So, Lisa, in this episode, we are exploring how the ATO manages payment and tax debt recovery. Tax debts are owed to the Commonwealth, and the ATO is responsible for collection of such. So, Lisa, let's set the scene here. We are exploring once tax liabilities are born, i.e., a return is lodged and a notice of assessment is issued. That debt must be paid. Before we get into the weeds, though, when is a tax debt due?
Well, it depends on what sort of tax debt it is, Lizzie. You know that, right? So it just depends. So it's due. We've already done an episode on assessments, haven't we? Amended assessments and default assessments. So let's just go. The ATO, providing it's not a default assessment, if I can put it that way, a bit of a caveat, it's due when you lodge a return, in effect, but then it could be backdated to be due after you've lodged a return. Does that sound confusing? I think it is. I think I'm a bit confused with that. But what we're saying is the ATO need to know what to collect. Okay, so if you lodge on time a return of any kind, whether it's a business activity statement, income tax return, FBT return, or whatever, you lodge on time, right? It's then due, if you're not an individual, when the lodgement was meant to be due, sort of thing, all right? If you're an individual,
You've got 21 days from the lodgement.
It's a weird one again. We can go through all the legislation, but if you don't use a tax agent, it's 31 October. So therefore, it's usually about 21 days after the 31st of October if you've got a payable, regardless of when you lodge it. Then if you use a tax agent and you lodge it after that, then it's bizarre. So we're currently in February. If we lodge today and that balancer is 31 March, which you're a big balancer as an individual, it's not due till 21st of April. Right, so it's usually about 21 days after when the lodgement is due, but it just depends sometimes with an individual when you lodge it. I know I'm all over the shop. I know that, but it really depends, okay?
Yeah.
But normally you lodge and then you pay, all right? So if you're an individual, you only pay on notice of assessment, okay? But if you lodge late, that notice of assessment, even though it's been issued, it could still be back paid. Okay? If you're a non-individual taxpayer, it's on lodgement or lodgement date, whichever is the latter. Is that right?
Yeah, I think that's about right.
Depends. Yeah. Sorry about that, but it is. It's a confusing system.
Well,
okay.
But I mean, this highlights the challenge here. We've got to be careful and understand that there are complex legislative provisions that are at play. It depends on the kind of taxpayer we're dealing with. It depends on, are we talking about the underlying assessment that's been submitted or the income tax return submitted on time, or if we're talking about a more complex arrangement, or if we're dealing with tax agents. So it always ends up depending. But that really then creates a bit of challenge when we're talking about issues around debt collection. What happens if we don't pay on time first? We've talked in previous episodes about general interest charges and shortfall interest charges. If we don't pay on time, we're going to be accruing extra charges on top, because the ATO is not meant to be a bank. It's meant to be collecting the debts that are owed to the Commonwealth. They're Commonwealth debts. The ATO is just the collector for that.
Exactly. They keep telling us they are not a bank. Okay, so if you think about it from a fairness point of view, Lizzie, that's how I look at it, always with our tax system. If someone says to me, Lisa, can I deduct this? And I go, well, no, but what happens if I do? I say, well, it's risk related, isn't it? It's sort of like, but to keep it fair, if you and I pay our debts on time, and I have to because I'm a tax agent, it's part of my responsibility. I can't keep my tax agent number if I don't pay on time as well as lodge on time. I do the right thing. But if you pay late, the ATO say, well, you're going to have some sort of penalty or interest because you're using the money that you should be giving to the Commonwealth to build roads and hospitals and schools and submarines, right? So don't forget there's a very much a fairness aspect to our tax system, and that's what we're trying to do here. So when a debt is due, if you lodge late, the debt backdated, you'll have interest from when it was meant to be due. Okay, but then if you lodge and you let the payment go longer, then you've got to pay interest on that money. And the interest is, as we discussed when we talked about general interest charge and shortfall interest charge, it's not as much as credit card interest, but it's a lot more than if you got, so it's more like, to me, it's more like a business overdraft type rate. If you went and got it's a lot less than your housing loan, your home loan, but not as much as credit cards, but it's sort of a bit in between, which makes it a bit like a business overdraft rate. So it's not a lot. And remember, it's not deductible now as well to business.
Yeah, and it can build up quickly. We've talked about that in our prior episode as well. It may not seem a significant amount, but it can build up and become more substantial than perhaps the tax debt was to begin with. Essentially, ATO they've got a PSLA on this. They expect tax debtors to organise their tax affairs to ensure payments of tax debts are on time and given equal priority with other debts that the taxpayers may have. So that's set out in a PSLA, which is a practice statement law administration, and we have PSLA 2011-14, which sets out the broad principles of ATO tax debt collection. So just a quick reminder for the audience, what is a PSLA?
The PSLA, practice statement law administration, I think it is. I think that's what it stands for. Is that right? Did I get it right?
Yeah. I think
sometimes you just use acronyms and sometimes forget what they stand for. So that's the rules that the ATO officers have to use when dealing with the taxpayer. Okay. So
and we've got a prior episode that covers off on a different kind of guidance.
Yeah. I always think it's interesting that their SOP, if you want to call it, is available to the public, which I think is good for transparencies, but that's what it says. So you're only going to use that when you want to deal with an ATO officer or the Commissioner of Tax, which is what it really is.
Yeah, and so this PSLA, it outlines opportunities for where the ATO may permit a payment of tax debts to be made by instalments, as well as deferrals of tax debts. So there are plenty of people out there who may not be able to pay their tax debt on time. So when might the ATO actually permit such an access, for example, to a payment plan?
Yeah, it's interesting because there's two different ways you can request when something's deferred for payment or when it's on a payment plan. So if you're asking for, remember how I said you've got to pay when you know how much it is and you actually lodge a tax return to find out how much it is, or an activity statement or whatever. You lodge some sort of return to find out how much it is. So you need to know how much it is first. So the first deferral that's available is when you defer the lodgement. And when you put in a deferral request, you can defer the lodgement and the payment. And usually if you get the deferral request accepted, you use the same reason for the payment request because you don't know how much it is, so it's that sort of thing. So that's the first aspect to it. But what happens then is once the debt's on foot and we know how much it is, okay, we then go, well, can we pay it when it's on time? And there are rules around payment plans, okay? Now, remember that, as Lizzie, you said before, the ATO is not a bank, right? It's not, but you can negotiate with them. So think of it as if you're in business, it's like you've got a trade payable, you've got your payables, and you go, can I negotiate? You know how sometimes you get an invoice and you get a discount for paying early, or sometimes on the invoice it says, I'm going to charge you interest paying late. Think of the ATO more like that than the bank. In other words, it's a debt owed that you then need to juggle. So payment plans, if we're going to look at it very, very high level, okay, you can set up a payment plan with the ATO. You can give them a call, or tax agents can do it through their portal. Or if you use a lawyer, they use a fax machine, but don't go there, right? They keep complaining that they still have to fax in, but yes, there's still fax machines.
And the audience may not know what a fax machine is, so
they can Google it. Ask ChatGPT what a fax machine is. I'm old enough to know that, okay? But what we've got, if you look at it holistic, the way the PSLA works is you've got 2 years maximum that you can have a payment plan for. Sometimes you can push it to 3 years, okay, in certain circumstances, depending on the size of the debt. You've got to make repayments regularly, and you can set that up to be weekly, fortnightly, monthly, or whatever. When you set one up, you've got to at least make a payment within the first 7 days. The usual way is you have to pay at least 10% of the debt in the first 7 days, and then you can pay it as you go. And it doesn't have to be linear. You can work out what your payments are accordingly. Okay.
And does GIC continue to accrue when a taxpayer goes on a payment plan?
It does, but there's that little interesting one where they will automatically remit the GIC if it's under $100 for the month. Okay, so you work out the GIC rate about 11%. So let's work in round numbers. $10,000. If your debt's less than $10,000, your GIC usually gets remitted automatically. But yeah, it still adds on. So you're not getting any remission of any of the interest. It's just saying that you are complying, and that's what's really important. With the ATO, you've got to have good compliance hygiene. We've talked about that in previous episodes. Right? No, but it is. You've got to engage with them. Don't put your head in the sand. I was talking to someone this morning about director penalty notices and things like that as well. You've got to engage. And so the ATO believe that if a debt is on a payment plan, you're complying. If you've got a debt,
really important.
Yeah, and if your debt's not on a payment plan, you're not complying. Okay, even if I have clients that, we couldn't get a payment plan through for whatever reason, they had bad history of compliance, and they set up their own payment plan. They just go, I'll just chip away at this debt. There is nothing to stop the ATO from coming in and debt collecting that.
Yeah, we've got to be really careful. This is, as I said, it's a Commonwealth debt. It's a genuine debt that taxpayers have to comply and engage with. So the ATO is not going to give out or permit payment plans for everyone. So what is considered in terms of the taxpayer's capacity to pay, and therefore the ability for the ATO to permit a payment plan to be given?
Yeah, so it's one of those ones where you've got to have good compliance history, full stop, right? Otherwise, they're probably not going to do it. Then, depending on the size, if it's chunky, if I can use the very, very scientific word chunky, you might have to prove capacity to pay. Right? So you've got to basically do a P&L for even an individual taxpayer. You've got to say, can you pay this? Is this going to cause you grief? And the silly thing is, if it does, they don't let you have a payment plan. But you've asked for the payment plan to try and, get yourself out of that sort of debt. And the other thing with payment plans is you're allowed a payment plan on each account you have with the ATO. So you can have a payment plan on your income tax account, your integrated client account, which is your BAS account, for those of you that don't understand how that works, right? And any other, you can have them on each of them. But the big thing you've got to be wary of is with say your integrated client account, we've got businesses that pay their BAS quarterly, right? If you've got a payment plan that goes over 2 years, for example, because you need the time to pay it and it's all been accepted by the ATO, when the next BAS comes in, you've got to pay it in full. You can't use the payment plans like a line of credit. You can't just keep adding to it. And the other trick with payment plans as well is, say you've got an income tax return that you get a refund from, but you've got a payment plan on the BAS account, the integrated client account. You won't get that refund. It'll go off your payment plan, but it goes off the principal.
Yeah.
It doesn't go towards the next payment as well. So again, the ATO are very rigid based on that PSLA on what they can and can't do.
Yeah. And sometimes the ATO may not permit a payment plan unless there's security on, for example, property that the taxpayer may own too, depending on the circumstances there. So what about if we defer the timing of payment? When may a taxpayer apply for that option rather than going on a payment plan?
Well, they've still got to be able to prove that they'll be able to pay it eventually. So it's usually extenuating circumstances, Lizzie. You can have a look at the PSLA and have a look at what the real requirements are. But when we're dealing as a tax agent dealing with the ATO, we're looking at every single option to get our clients to comply to keep them in business, right? And the ATO do have that option. The option for individuals is to go bankrupt, right? Which would be the last resort. Why would you ever want to go bankrupt? But of course they do. But with a business, the ATO's attitude is always to try and keep that business running, because while that business is running, they would be paying extra tax. So it's a win-win situation. So they do whatever they can. And sometimes you might want to go into, small business restructure relief and those sort of things as well if you've really got bad sort of debts. But it all depends on how you get into what's the best way for you to meet that tax obligation within the taxpayer's financial capacity, which will satisfy the ATO rules. Because what we've found since the change of commissioner is the ATO really applying the rules with what they're allowed to do. And that's what we're doing. So a lot of people are going, well, hang on, 5 years ago this could happen. And they go, no. They're applying the rules. So again, as I said earlier, it's so everyone is treated equal.
Yeah. And like natural disasters or serious illness can arise. So in those instances, deferment may be offered in those instances. So flood, fire, drought, earthquake, those kind of things are listed within the PSLA as reasons that we might, the ATO might ultimately permit these kind of deferments as well.
But it's not holidays and things like that. And, my dog ate my homework type excuses, Lizzie, as well. And the other thing that comes through, and I think it came through when we were talking about GIC and SIC, it's the same sort of themes that are coming through with all of these as well, is that there's got to be an event that prevented it with a good nexus with it. It can't be, my dog passed away 2 years ago and I couldn't, pay my bill in 2 years' time. It's that sort of thing. There's that nexus with it all. But also what you find is when we have our natural disasters, which you did bring up, thank you, is that the postcodes come into play then. And a lot of times the ATO won't chase up based on a postcode region. So say when the Lismore floods came, all the Lismore postcodes were sort of quarantined to say, don't chase these people up. When we had our Black Friday or whatever black issue happened with the fires, when the postcodes get quarantined for that. And that's where that comes through as well. But again, it's things beyond the taxpayer's control, which is really the attitude for it. And the other thing as well, that's the taxpayer, not taxpayer adjacent, if I can put it that way. Okay, it's like you can't use the excuse, although you can throw us, the tax agent, under the bus. But if the tax agent gets sick, the ATO will say, well, why didn't you change tax agents? Right? You've got to give a reason why.
Yeah, so we've got to think about firstly paying on time and in full. We can find short-term relief through the form of a deferral. We can look to payment arrangements, so payment plans, if we've got particular circumstances that are limiting capacity. But we're also going to have a chat in our next episode about more serious issues such as hardship and non-pursuit of debts. But even then, we can, even go down to debt collection, to dispute pathways and settlements, but we're not going to go there in this particular episode. So as we wrap up this episode, is there any additional message you want to send to the listeners today on the debt regime for the ATO?
I think it's going to be a bit of a message I've said before, Lizzie, with it all, and that's just keeping everything compliant. Okay. If something happens where you do get yourself into some sort of pickle with the ATO, if you've got a history of compliance, they're much nicer to deal with than anything else, and treat the lodgement with the same respect as the payment, or the payment with the same respect as the lodgement. And I think that's really important. And we'll talk a bit more next episode about what's happening with that. And don't ignore the MyGov messaging that's coming through, is what I'm saying. Don't go and click on a link, because we don't want to do that, because you don't know where it's coming from. But it's really good, since we all have to pay tax, and we hope we do, because that means we're earning money. If we're all in that environment, Lizzie, I just think as part of checking you've got milk in the fridge every, month or quarter, even if you're just a salary and wage earning employee, check what's happening in your MyGov account to work out that there's nothing that you've overlooked, because things can easily get overlooked, and the responsibility is on us to do it. It's not I never got the letter from the ATO. Bad luck, guys. They can do things with text messaging.
All right, well, that's it for this episode of Taxed and Confused, where the rules are rigid, the paperwork is endless, and the burden of proof is all yours. If you enjoyed today's deep dive into tax admin, don't forget to subscribe, leave a review, and share it with someone who's just as confused as we are. And remember, this podcast is for education and entertainment purposes only. It's not tax advice, and we're not your tax agents. Thanks for listening, and until next time, stay curious, stay compliant, and stay just a little bit taxed and confused.